let's talk about how all of this feeds into the markets, right? Because we have had this economic data that continues to show some level of strength in the economy. We're actually now seeing the Dow at the moment at the highs of this young session. The Nasdaq's up about 0.6% as well. We bring in now Keith Lerner. He is Chief Market Strategist at Truist SunTrust Advisory. Keith, it's good to see you. So, as we get these economic numbers, I know that you're looking at perhaps a sort of pause phase in the markets through the end of the year because one could argue perhaps that the market's already priced in a pretty robust economic recovery. What do you think?
Well, first, great to be back with you all. We're still generally positive. I mean, obviously, we had a huge month in November, over up to 10%. When we test that out historically, when you look at 12 months, that's still very positive. And you tend to see double-digit gains looking out 12 months. On a very short-term basis, sentiment is getting a bit hot as far as expectations have moved higher. So I think, just some type of digestion period would be perfectly normal after such a big move. But overall, even if we see a little bit of a slowdown in the economic trends, I think the market is getting this right as far as thinking about not just the next 2 or 3 months, but what does the next 9 to 12 months look like? And in general, we think the economic, economy continues, and it is positive insofar as that, there's a lot of debate about this fiscal stimulus right now. From the prior fiscal stimulus, we still calculate almost $1 trillion of savings out there still to help, help households get through this, short-term uncertainty.
Keith, when we talk to your peers, strategists on Wall Street, everyone is quite constructive on the outlook, and we all know those reasons why. I'm curious what the incoming is like right now from your clients. Is there still skepticism regarding why stocks have gone this far, this quickly? Because that was a feature, right, all through the spring and the fall. A lot of questions about why. Is your client base starting to get on board, and does that maybe change how you're thinking about sentiment at all?
Well, we've been calling this a bull market since May, and we've been positive, as you know, as a whole. Our clients, there's still some uncertainty. I think the COVID numbers is hitting home a lot closer to more people as those numbers rise. So I think there's some angst on that side, but they're also looking forward and seeing that vaccine on the other side. I will say just some interesting, things as we look back over the last month. Going into the election, there was just such a high amount of tension, anxiety. And we mentioned, when we talked to you last, that VIX level was twice the level as normal, so a lot of tension. What's really interesting, in November, the VIX decline in that 1 month was the greatest decline in the history of the data back to 1990. So we had about a 45% reduction in the VIX. And what that tells us is that was a big release of some of this tension. Now, I think what the market has to look forward to is, okay, what's the next catalyst? We think because we're still relatively early in this economic expansion, the next catalyst is simply the business cycle working for the market. But again, I just think sentiment on a real short-term basis is a bit hot, but you don't want to become too cute if you think the big market trend over the next year or a few years is still positive, and that's our base case.
Keith, I'm curious on what camp you fall into. Do you think we will see on a global scale a growth boom because of the vaccine? Because I would argue that's what the market globally is pricing in today.
Yeah, and the way we're thinking about it is almost a tale of two halves for next year. It's still going to take time to get, as far as the logistics on the vaccine, but we do think we're somewhat spring-loaded in the back half and into late to 2022. And I think the other thing that has been underappreciated, which we've been really speaking about for several months, is earnings. We think on the other side of this that companies are going to be leaner and meaner. And if you think back to the financial crisis, when companies came out of that, profits came back much quicker, even though we were still in a relatively slow economy. On this side, with that spring-loaded economy, we think that earnings will ramp back up very, very quickly. And I think that should support the markets. But again, I think as expectations get up, you're just a little bit more vulnerable to unexpected bad news. And the whole vaccine process isn't going to just be smooth. We will have some bumps along the way. But again, you have to look at the main trend, which we still see as positive, Brian.
I'm enjoying all of the analogies we're getting over the past few days now. Spring loaded, you just referred to. Somebody else said it's like when you hold a volleyball underwater and then it pops up when you let it go. Keith Lerner, looking forward to talking to you soon. Keith Lerner is Chief Market Strategist at Truist SunTrust Advisory. Thanks so much.